Hello, welcome back. In this video we are talking about Lucid Group. It's another auto manufacturer, and these ones have been all the craze in the previous couple of years or so. Of course, Tesla initiated the whole thing, but you will see people getting a craze and putting money on these things. And this company is actually up today 11%. You will see that overall it has been down 66% from its highs of 57. So if you take a look at this MAC chart, the company has had a massive run, then went down, and then another massive run, and then down again. But we don't really care, of course, about what the stock price is. What we do care about is what the company is doing in terms of its finances. And if you haven't seen this company's financial statements, you will be more than likely shocked with this one. I actually have very few words to say about this one, so let's get down to it because it's a fascinating story. First of all, let's examine the stock news. Do we have anything here? So there is some opening supposedly in Saudi Arabia and all that jazz, but the whole thing about this company is what are they doing financially, and does it actually make sense to invest here? So first things first, the P ratio that is negative, the company is losing money, as you would kind of expect with for a new auto manufacturer here. This can be normal. But the price to free cash flow ratio is also negative, another thing that could be expensive. But take a look at these outstanding shares, 1.66 billion. Not much of a dilution, surprisingly. I would expect stockholders to already have been massively diluted here, but it's not happening. Okay. Again, the free cash flow was negative, so we cannot really use this value here. It's only the revenue growth that has been a good thing about the company. But take a look at this. And yeah, this is not a joke. The company actually made 5 million, or less than 5 million in 2019, and they made 27 million in 2021. So let's stop for a while and think about this. The company made 27 million last year. What do you think its market cap should be? Its market capitalization. It made let's round it down a little bit and just say, or actually round it up and say that the company made 30 million last year. So what's its expected valuation? If we give it a multiple of 20, that would be $600 million, right? That would make some sense. 20 is fair. Maybe 30, even 30 could be okay, like 900 million or maybe close to a billion. That could make some sense. $1 billion in terms of valuation, that would be like a 31, 32 multiple. Okay, expensive but fair. So let's examine what the current market cap of this company is. $32 billion. So let me get this straight. The company is making 20 million, and it has a $32 billion market cap. Okay. So as you can understand, this is an effectively insane price to sales ratio here because the revenue is very little compared to the price of the stock, which is basically the market cap. So as you can understand, we already know that we have to deal with an extremely overpriced company here. Pretty much insane what is going on, and margins are insanely negative. The company is losing money, tons of money. Of course, it's not making any positive income. And let's take a look at the financial statements, really, for which we don't have, of course, a lot of data, but we do have the past couple of years or so. And you will notice that it was 27 million. They actually even lost money in 2020. How did they even manage to do that? From 4 million. Okay. And net income that is minus 2.5 billion. These kind of companies are extremely cash intensive, as you can understand. And now the company is losing tons of money, and I'm seeing that they are not making too many sales is a big problem here. And if we take a look at the balance sheet, total equity of $3.9 billion pretty much. But the cash flow statement here, you will see that the cash from operating activities becomes a minus $1 billion from minus 2.5 because of stock-based compensation and some other non-cash items. This is a one-off. And investing activities that are in the negative, investing a little bit in pretty much capital expenditures, and cash from financing activities, getting a lot of debt in billions, of course, because the company has to. This is a company that will keep on taking massive amounts of debt, I'm pretty sure, and they're going to deplete these amounts very, very quickly. And then more than likely they will have to dilute investors. So this is going to be the story of this company. 6.2 billion right now. at the end of this period is what they have in cash, and minus 1.4 billion in free cash flow. So yeah, this is insane for somebody to invest in this company. This is pretty obvious. But the thing is, if it's much different to invest in this company at a valuation of like let's just say $100 million or $300 million. This one is at 32 billion, and so if we even attempt to have a discounted cash flow model here, you will be surprised at the price that we're going to get. Even if I use a revenue growth of 100%, 120%, and 140%, of course, absolutely insane that the company will make this happen in the next 5 years. Now look at these net income margins. The company has been losing tons of money, so these are extremely negative because when you are making 27 million in sales and your net income is minus 2.5 billion, this is the margin that you're getting, of course. This is absolutely insane. And what can I use here? I will actually deduce that at some point the company is gonna be very profitable. And let's just say that for the next 5 years they're making 20% net income margin, 30% for a medium, and 40%. Now in comparison, Tesla is making something like 18% right now. Ford would be something like 9%. Auto companies make very low margins, but for the sake of the exercise I'm gonna go extremely high, which of course is never going to happen. 20, 30 and 40, let's just say. Absolutely insane. This is like Microsoft level of net income margin, or Apple, for example. Free cash flow margin. I will say that the company will achieve 100%. 100% of the net income becomes free cash flow, pretty much. And so my model is gonna work with this one, and a 13% annual return. And I'm using these values as an example to show you how overpriced these companies are and why you should be very far from purchasing those. And if we hit calculate here, take a look at this one. So the company, even with these potential projections here, which is 100% in revenue growth, 120 and 140 revenue growth, 40% net income margin, 100% free cash flow margin, the company is $1, is the max price to pay, and the current price is 19. And this happens because the initial values are very low, they're in the million. And so because the company's valuation is 32 billion, even if we double our revenue growth every year, it's going to be from 27 to 54, then 100 million, 200 million, and so on. So we won't even achieve $1 billion in the next 5 years if we just do this 150%, or we may just achieve that or something of that sort. So you can understand that this company is extremely expensive, and I wanted to make this video because I'm seeing that it is trending right now, and you need to be extremely cautious about this one and never ever have it in your stock portfolio for a long-term hold. It will be insane. You can potentially trade it. It's an extremely dangerous one to even trade this one, but for a long-term hold, just don't get derailed from seeing this 11% increase. This is almost like trading a cryptocurrency here. It has almost zero value, and people are still buying it because that's how trading works, that's how trends work, and that's what happens with the stock market many times, especially when there's a trend around the company. But yeah, I mean, this is just absolutely ridiculous here. So thank you for watching this video. I hope you liked it. Please leave a like and subscribe if you enjoyed what you watched. And remember that you can become a Patreon and get access to this tool that can save you a lot of headaches. Just by looking at this, you could avoid this company like the plague. And you can definitely save yourself quite a lot of money doing that. And you can become a Patreon if you are interested. You can get unlimited access to the tool. Links in the description box below this video. Thanks for watching. I'll see you in the next one, guys. Bye-bye.